When it comes to investing, it all starts with building a habit of investing regularly into your investing accounts. And then from there, it's all about being diversified and having a strong foundation. A strong foundation that is diversified gives you something to lean back on when times get tough. A strong foundation that is diversified also allows you to take part in broad market rallies. And in today's video, we're going to take a look at two of the most popular ETFs on the market today. We're going to look at VOO, which is the Vanguard S&P 500 ETF, and SCHD, which is the Schwab US Dividend Equity ETF. We are going to look in depth at both of these ETFs, compare them to one another, look at top holdings, look at past performances, and look at if you were to invest $100,000 in both VOO and in SCHD, how would things turn out today? So if you're excited for today's video, do me a huge favor and click that like button down below, subscribe to the channel, and let's get started. Hey everyone, Mark Rusin here, back for another video. As always, I'm a CPA and not a financial advisor, so please do not take this as financial advice. And before we begin, let me take a quick moment to thank today's video sponsor, which is The Motley Fool. The Motley Fool has a ton of great tools and products available for investors of all different levels. And right now, if you go to fool.com/Mark, you could sign up to receive their 10 best stocks to buy right now, completely free. Now back to our video comparing the likes of VOO and SCHD. It sounds like a pretty simple choice, and you probably think that VOO has easily outperformed SCHD over the years, but that's simply just not the case. Looking here at this 10-year chart, you can see that VOO has returned 220% over the past decade versus SCHD returning a little over 200%. In fact, over the past 3 years, even with SCHD underperforming VOO badly in 2023, SCHD is actually outperforming VOO over the past 36 months. Lastly, let's compare 2023, which I mentioned has been a struggle for SCHD, as the fund is pretty much even on the year. However, VOO is up 15%, so a pretty wide gap here in 2023. But it's definitely interesting to compare the two. Those are the past performances for both of these great ETFs. We looked at a 10-year chart, a 3-year chart, and a year-to-date chart for 2023. Now let's take a closer look at the positions and the portfolio of each. Beginning with VOO. As you know, VOO is the Vanguard S&P 500 ETF. It mirrors the S&P 500 index. Given that, the ETF is very passive, and along with that comes a low expense ratio of just 0.03%, essentially nothing. The ETF has over $325 billion in assets under management, making it the third largest ETF. Now let's quickly look at SCHD, which again is the Schwab US Dividend Equity ETF. SCHD tracks the Dow Jones US Dividend 100 Index, which looks to invest in companies that show their ability to pay consistent dividends. The ETF does not mirror the index completely, as 90% of the net assets mirror that index, but the other 10% gives the fund managers more flexibility. SCHD also is a great low-cost ETF with an expense ratio of only 0.06%, meaning you would pay only $6 for every $10,000 in value that you have within the fund per year. In terms of size, SCHD is much smaller when compared to a giant fund like VOO, as SCHD has assets under management of nearly $50 billion. So a nice sized fund in itself, and actually the third largest dividend-focused ETF, trailing the likes of VIG and VYM, which are two other Vanguard ETFs. SCHD, though, has been growing rapidly in size and popularity over the past few years and is about to pass VYM as the second largest dividend-focused ETF. Now let's turn our attention to some more important factors that you want to know when investing in an ETF. It's always important to understand the structure of the ETF and also very important to understand the expense ratio. But what you really want to know when investing is what are the top sectors and what is my exposure in terms of the top positions. Let's begin by looking at the sector breakdown, which shows which sectors the portfolio is most exposed to, and we will begin with VOO. Looking here, you can see that, to no surprise, technology is the leading sector, with an exposure rate of nearly 30%, followed by healthcare at 13%, financials at 12%, consumer cyclical at 11%, and communications rounding out the top 5 with an exposure rate of nearly 9%. Now let's slide that VOO sector breakdown over and put up SCHD's sector breakdown right next to it so we can easily compare the differences. As you can see, we get a much different picture as industrials leads the way with 18% exposure for SCHD. That is then followed by healthcare at 16%, financials at 15%, consumer defensive at 12.6%, and then technology, which was again the largest sector weighting for VOO, comes in at only 5th largest sector for SCHD with a weighting of 12%. That's really where it comes down to in the differences here in 2023 in terms of performance. Technology has clearly led the way with communication services in 2023. For the first 6 months, we're starting to see things broaden out a lot, but technology was a one-headed monster here to start the year. As we know, technology is the largest sector, so it should come as no surprise to see Apple and Microsoft holding down the top spots for VOO, accounting for 7.5% and 6.5% respectively. They are then followed by Amazon, Nvidia, Google or Alphabet, Tesla, Meta Platforms, Berkshire, and United Health, rounding out the top 10. Nvidia and Meta alone this year are up 200% and 135% respectively just this year. The top 10 positions for VOO account for 30% of the entire portfolio, and in totality, VOO has 509 positions, which is not an even 500 due to some companies having multiple classes of stocks, Berkshire being one of them, Alphabet being another. Now let's move over those top positions for VOO and put up the top positions for SCHD, which will look quite different than the top-heavy technology giants within the S&P 500. The top positions in SCHD is a healthcare stock in Amgen, which accounts for 4.5%. They are then followed by Cisco Systems, AbbVie, Home Depot, Broadcom, the Coca-Cola Company, Merck, Chevron, UPS, and PepsiCo rounding out the top 10. As you can see, very, very different positions with zero overlap, in fact, within the top 10. These top 10 positions account for 41% of the entire fund, so a much larger share of the overall fund than VOO. And in totality, SCHD has only 104 positions, so much smaller in terms of total positions than VOO. So with VOO, you see that tech heavy at the very top. SCHD, though, is much more well-rounded, a much more diversified portfolio. You would think diversification when you think about the S&P 500, but 30% just to one sector isn't a ton of diversification when you look at the sector breakdown of SCHD. Now that we've taken a look at sectors, we've taken a look at the top holdings, let's take a look at the dividends. Let's begin with SCHD. After all, SCHD is focused on investing in dividend-paying stocks, where this is not a requirement with the Vanguard S&P 500 ETF. SCHD's latest quarterly dividend announcement came at 66 cents per share. That's on a quarterly basis. So if you annualize that, you would get $2.64 per share, slightly higher than their trailing 12 months. This would equate to a forward dividend yield of nearly 3.6%. The fund has a 5-year dividend growth rate of nearly 14%, and investors have seen the dividend grow for 11 consecutive years. 14% is some solid dividend growth, especially going along with that 3.5% dividend yield. Now let's compare to VOO, which pays a forward dividend of $6.32 per share, which equates to a much lower dividend yield of just 1.6%. Over the past 5 years, investors have seen the dividend grow at an average annual rate of just 6%. And the dividend is not consistently growing. It fluctuates based on the positions coming in and out of the S&P 500, which are updated on a quarterly basis. After all, VOO is less known for their dividend, whereas SCHD is an actual dividend ETF. So when it comes down to it, which ETF are you going to choose? The performances in terms of total return isn't all that far apart over the past decade. The top 10 positions are drastically different. The sector breakdowns are different in terms of weighting. And the dividends are quite different. So which dog do you have in this fight? Let me know down in the comments section below. Now let's turn our attention and act as if we put $100,000 into each of these ETFs at the start of 2014. We put $100,000 into VOO and we put $100,000 into SCHD. Now, this is just for simplicity reasons. It could be $10,000 that you have in there. It could be $1,000 that you have in there. But we're going to take a look at over the past 10 years how you can get drastically different results based on dividends and total returns. So let's take a look. So looking at this chart here, we're going to begin with VOO. If we would have invested $100,000 at the end of 2013, you would have been able to buy 591 shares of VOO, which would have earned you $1,837 in annual dividend income. If you use that money to reinvest the next year, aka compound, you would have been able to add an additional 10 shares to your portfolio, and by year 2, you would be earning $2,097 in annual dividend income. Do this year in and year out for roughly the next decade through today, which is mid-August 2023, and you would have amassed more than 683 shares of VOO. You are now earning $4,237 per year in dividend income, and the market value of your original $100,000 investment is now worth nearly $274,000. So now let's do the exact same thing for SCHD. Looking at this chart here that I created, you can see that we were able to buy 2,728 shares of SCHD at the start of 2014, or the end of 2013, I should say, which would give us annual dividend income of $2,466, nearly $600 difference between SCHD and VOO in year 1 dividend income. If we do the same thing and reinvest those shares each year, you can see that by year 10, we will have amassed 3,559 shares, now earning annual dividend income of $9,257. That there, folks, is the true power of compounding dividends. When we compare market values, we're not actually that far off, but the big difference is the yield on cost and how much we are now going to be earning moving forward in annual dividend income. So if that's your goal, SCHD looks pretty great right now. So again, this is just a simple example using $100,000 for simplicity reasons. It could be $10,000, it could be $5,000, whatever your portfolio, whatever you choose. However, which one you're going to choose is drastically different. Are you looking for more diversification? Maybe you're looking for more dividend income or the power of compounding, then SCHD might be your selection. But if you're looking for more top heavy, still getting that diversification, the total return, then VOO might be your position. And it might be that you say, why not own both of them? I own both of them, and they're both top positions, foundational positions in my portfolio. Now that we've looked at this, has this changed your answer at all? And if you haven't commented yet, make sure down in the comment section below, you tell me which ETF do you prefer? Is it SCHD or is it VOO? Thanks again for watching, and I hope you found this video helpful. And with that being said, we'll see you in the next video. Take care.